Meta Platforms is scheduled to report quarterly financial results after the stock markets closed on October 29th, 2025. I've been bullish on Meta Platform stocks since 2022. I've recommended it as a buy each and every year since then, and investors are asking me, do I still like this business? Do I think it's a buy before earnings? I'll answer that question in this video. I'll highlight the big things that you need to look out for from Meta. Really important factors right now, especially because the spending on artificial intelligence is increasing by such a large magnitude. You want to compare it with this one critical metric to determine if the market will be okay with Meta's continued investments. I'll share those details here with you. You're not going to want to miss it. Let's jump right in.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So when Meta last reported their earnings results, it was on July 30th, 2025, and the market really liked what Meta reported. And as long as they keep these critical metrics up, the market's going to be okay with Meta spending aggressively on AI. And the critical metrics, for starters, is the revenue growth. Meta reported 22% revenue growth in its most recently completed quarter. That's better than a lot of the social media companies, even smaller companies like Pinterest and Snap. That was surprising to investors. Typically, those smaller companies will grow revenue faster than Meta, but Meta outpaced them in revenue growth. Only Reddit outpaced Meta in terms of revenue growth as a social media company. And that's impressive given the size and scale of Meta to continue increasing revenue at a clip faster than its smaller peers. Additionally, operating income jumped by 38% to 20 billion, over 20 billion, and the operating profit margin expanded to 43%, up from 38%. So long as these metrics are anywhere near these figures, the market's going to be okay with Meta spending aggressively on artificial intelligence because the business is generating so much profit and cash flow. They're going to be okay with the company reinvesting into the business because the business is larger and the business can support these aggressive investments. And incremental improvements in, let's say, the recommender system will have a larger impact on a larger scale. So that's why the market will be okay as long as I think Meta Platforms grows revenue at around 15% or more. I think the market will be okay with Meta continuing these investments. Furthermore, you had significant improvement in the company's monthly active user figures. In the latest report, family daily active people, so this is the number of people that are using one of Meta's apps or more than one of Meta's apps, that reached 3.48 billion, which was an increase of 6% year over year. But an increase of 6% when you're at over 3 billion, that's a year over year increase of almost 200 million. That's a massive size increase in the number of people that are using one of your apps. That's a key figure that investors are looking to support the company's investments in AI. If they're growing family daily active people by anywhere near that figure, then the market will be okay with Meta investing in AI because they'll think to themselves, well, if you invest more in AI, it's going to create better recommendations for the people on your apps, which is going to keep them engaged for longer, which is going to allow for better advertisements to be shown. And oh, by the way, those advertisements that are shown will be better targeted with incorporations of artificial intelligence. You'll be able to target the people you want to target when showing advertisements. And so you as an advertiser will get a better return on your investment, which will make you want to invest on Meta's apps more frequently because you're getting a good return on that investment. Okay. And that's precisely what's been happening. The number of impressions delivered across their apps increased by 11% year over year. The supply of advertising increased. The inventory increased. Meta gets to generate revenue with each advertisement shown. So the more advertisements that are shown, the more revenue is generated for Meta. And at the same time, you had the average price per advertisement increase by 9% year over year. That combination is really impressive. The supply is increasing, but at the same time, the price is also increasing. Typically, right, if you took my Economics 101 class at university, I've been teaching for several years. I go through that chart, supply and demand. And when supply goes up, usually price comes down. But for Meta, supply is going up, but the price is also going up, which signals strong organic increase in demand for the company's inventory, which also signals that marketers are getting a good return on investment. The quality of these advertising impressions is improving. With the use of artificial intelligence, Meta is able to show better advertisements. By show better advertisements, what I mean is it's more relevant to the folks that are on the platform. Okay, so that means it's getting better click through, it's getting better investment from the purchasers, right? So I was impressed that, when I was on Instagram a couple of days ago, and I'm not on Instagram very frequently, and I saw an advertisement for something related to Formula One. And it interested me because I'm a Formula One fan. So I enjoyed watching that advertisement and I clicked through to the website. Okay. So if they show me, advertisement for something irrelevant, it annoys me and I'm not clicking. I might actually turn off the app because I'm bothered by this interruption. But if they're showing relevant advertisements, they not only increase the return on investment, but they make the user engagement better. And that's how Meta's been really capitalizing on AI and improving business performance. So looking ahead, the company's forecasting third quarter revenue to be between 47.5 and 50.5 billion, or 49 billion at the midpoint, which would be a $1.5 billion increase from the previous quarter. The company is also expecting slower growth in the fourth quarter compared to the third quarter. That's something you want to look out for. How much slower? Will Meta say how much slower the revenue will be in the fourth quarter? That's a big concern because the economy is slowing down, job growth is slowing down, consumer spending is slowing down, especially on the bottom half, uh, especially on lower income consumers. Their spending is decreasing. So we want to see if that's having a big impact on Meta's advertising revenue. Furthermore, you want to look at what the company says about capital expenditures. This is a category they've been increasing meaningfully on AI. So their last forecast was for a range of 66 to 72 billion. That was up from 64 to 72 billion. So from a midpoint of 68 billion up to a midpoint of 69 billion, which would be up 30 billion from the same time last year. We also want to look at if they're going to give you the number for next year. They already told us that they expect another year of significant capital expenditure growth in 2026. So I'm estimating, right, if they're going to spend 70 billion this year and they're saying it's going to be significantly higher next year, we're looking at least $80 billion, perhaps 90 or $100 billion on CapEx for AI next year. We want to see the details of that number. And I would like to see a revenue forecast for next year as well, if they're going to give us the CapEx forecast, so the market doesn't freak out about Meta. If Meta just comes out and says we're going to spend $100 billion on CapEx next year, which would be another $30 billion year over year increase, and they don't tell us anything about revenue, the market might get a little spooked with such a big increase in CapEx without some insight into revenue. But if they come out and say, we're going to spend $100 billion in CapEx in 2026, but we also expect at least double-digit revenue growth next year, I think that'll calm the markets and the markets will be okay with that huge increase in CapEx. So to answer the question, do I think Meta stock is a buy before earnings? Well, I think the stock is meaningfully undervalued. I calculated a fair value at $857. The current price is $735. So this is one of those stocks where if you wanted to buy before earnings, I think it's significant. It's undervalued enough where it makes sense. You can buy before earnings. You can also do half and half, buy half before earnings and half after earnings. This is a business where I like the long-term prospects, and I have liked the long-term prospects. I wouldn't try to be fancy around timing of your investment. I would make a commitment if I'm interested in the company and buy it over time instead of trying to pinpoint the time when you buy this stock. I would say you know what, I'm interested in owning Meta stock for my portfolio. I would like, to invest, let's say, $1,000 in Meta stock. And personally, what I would do if I wanted to invest $1,000 in Meta stock right now, I would split it up into four pieces and buy $250 today, $250 after the company announces earnings, $250 a month later, and $250 2 months later, and spread my purchase allocation across time. So that way I reduce the risks of downside and I reduce the risks of upside. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.